Hi, this is Lakhi Singh, the property fixer, here to fix you and help you grow your property and your business affairs to the next level. So if you're looking for knowledge and insights about how to get involved in property, solve your problems about scalability in your property business, then do watch our 20-minute clips. We've taken them from hundreds and thousands of videos that we've taken over the last 6 months, and we've broken them into simple chunks which can make them useful for you. So do watch and do subscribe to our YouTube channel underneath as well.
That is, you're signing your house to the lender effectively, but on the plus side, you're not going to make any more payments and you're not going to be evicted. So you've got that peace of mind as well.
So that is a solution potentially for something. Yeah, okay. Lakhi Singh, have you got anything on the commercial side that you could call similar to what Bob's talking about, equity release? And is that a solution to negative equity, or not negative equity? That's not the solution. The point is releasing money from your portfolio.
No, there's no such thing, because commercial lending is unregulated, and it relates to commercial assets only. Because anything that is related to somebody living in their house is regulated. Anybody that's commercial wouldn't really touch that sort of thing, because they would be then potentially holding themselves liable under the is it the Financial Conduct Authority? Yeah. Is that right, Bob? Yeah.
Yeah,
so
absolutely.
The Financial Conduct Authority is very, very active in terms of monitoring any microcosm of anybody infringing any of their regulations or going above and beyond the commercial side and overspilling into regulated. So that's one point. So there isn't really anything. I mean, what is happening is that you're getting a lot of mortgage prisoners. And I think it's probably worth getting Bob to elaborate of really what's happening with the phenomenon of mortgage prisoners, because that's a sort of you could call it an in-betweener of negative equity, and you know, there could be brothers and sisters, maybe, yeah, mortgage prisoners and negative equity prisoner.
Okay, let's throw the question back to Bob. You're obviously quite a seasoned mortgage broker, and you're in it's Uxbridge, I think, so in Hillingdon. Tell me, what is the landscape when it comes to mortgages now? We understand that obviously there are few banks lending. Banks are very quick to withdraw from the market. They test market certain products, and then they are dipping in and out of the market. There's no week that probably goes by with a clarity of a mortgage product that's going to be available for the long term. So what is a mortgage prisoner that Lakhi's talking about, and do you have people like that?
Yeah.
And what are you doing?
Yeah. Mortgage prisoners are people who've taken out a mortgage with one of the banks that maybe stopped lending at the last crash, or you're with somebody who's securitized their debt, because once banks lend, 500 million or £1 billion on a book, they tend to sell it off to an investor. They tend to sell it off to another bank and get their money back. So that debt is assigned over to the new lender. Now, the new lender is obliged to honor your interest rate that you were paying with the previous lender, but what they tend not to do is offer you any more products. So once you come off the fixed rate or variable rate or whatever, you end up paying the standard variable rate, which is 5% in some cases, and they don't give you any option of a product transfer. And you're a prisoner because your income or status has changed since you took out the mortgage, and you can no longer remortgage away from that lender, so you're stuck. So if your income has stopped, your income is lower than what it was when you took out the mortgage, you're going to be stuck and paying 5%, when the rest of the world is paying 1.5% and 2%. So therefore, you're imprisoned. But there are talks of the FCA discussing this issue with a few banks and releasing products through certain brokers, where if you can demonstrate that you've been paying that mortgage at 5%, then obviously you're going to be able to pay that mortgage at 2%. So the standard rules of affordability calculations will be thrown out the window. Banks will pretty much be forced to offer these prisoners standard rates like everybody else and treat them fairly as well. So it's early days yet. NatWest is in talks. So NatWest may be one of the first banks to offer mortgage prisoners a product. But that's yet to be seen. The terms aren't out yet, but certainly it will only be available through a few brokers that the FCA has chosen. So there'll be larger firms involved, obviously, and those customers will be able to take out a standard rate mortgage if they can prove they've been paying their mortgage satisfactorily for the last 5-10 years.
Okay, so can you tell me, Bob, you're running a mortgage brokerage, I believe, and you probably got staff that are employed by you.
Yes.
Where is your business going? I mean, is your business sort of somewhat on a idle, on a slow burner? Are you still hot on with work? Is it the work has become reduced, but the application times are longer, the queues are longer, therefore the timeline in processing an application has become longer, but you seem to be as busy, but you're not that busy. Where's it going? And have you had to adjust your pricings? Because obviously, if you're not making the volume of business, it's going to have to bend somewhere. So where is it? What you're doing? What are those tricks that people can listen to and get some understanding from you as to how they can look at changing their business model or their pricing structure to remain profitable?
Okay, well, thankfully we're still very busy, and that's, I think, mainly due to the stamp duty holiday. To be honest with you, everybody is wanting to take advantage of that saving. We've got 2 administrators. We're taking on a 3rd, so there's a lot of business still coming in. We rarely discount our price because there's a lot of work involved in the application process. The timelines, as you said, have actually lengthened, so it's no longer that you can get a mortgage within 1 or 2 weeks. It's now 5 to 6 weeks at the absolute minimum. And there are some banks that aren't even looking at your case 6 weeks after submission. I won't give their names, but it is actually absolutely terrible. And banks are coming in and out the market, which is absolutely silly. How can you offer a 90% product for one day and then take it away the next? It's not as if anybody's not as if anybody's waiting for that particular day for to apply, because brokers, we can only apply when we get the business in. So it places a lot of pressure on the broker market to actually get cases in, and then it makes it worse again, because if everybody piles in on one day, then there's another bottleneck in the bank's processing systems. So it doesn't help anyone.
Excellent. Okay, so you haven't compromised in your price, or you haven't increased prices, but you're saying there's still a lot of work that goes in. You're still busy, even though there's a slight bottleneck in applications. So where do you see the mortgage market going? Do you see the banks coming back online? Do you think it's all going to fizzle away? Are we going to go into, there's a talk of, you're talking about talks. There was talk of the market in the UK changing from traditional, mortgage purchasing to long-term leasing. So the standard AST, short hold tenancy becoming scrapped, and people actually taking out long-term leases. So you're just taking out an exceptionally long lease. That is the way you're going to be living in your properties. Lakhi Singh, I'm going to come over to you on that. What's your take on it? Is it going to become more of a commercial market? So gone are the days that people buy their mortgages they stick to their 9 to 5s, they pay off the mortgages at the end of its term, and then they're living in their cozy little pad that they've worked hard the whole of their life. Or is it going to be a bit more like the American market? You take out leases, and it's only going to be the top tier people like yourself with money where your scarf is who are going to be able to purchase.
I think, like you started off the conversation in the morning, first thing Bob Singh said is that expect the unexpected. So certainly the UK market has always sort of just been like 10 or 20 years behind what's happening in America. So whatever's happening in America is probably becoming slowly normalized in the UK. So I think it's inevitable that long leases, these type of things will come into play, because as we're going into sort of like, although this temporary stamp duty bubble that you've got, the whole economy could technically become very weak, and 10 or 20% of people in the UK, if not more, may have to actually go down working in a completely different way than they are now. So I think I've actually heard.
You mean like go down like in the Terminator Reborn, when everyone goes underground and there's going to be like another world under the sewers, sort of fighting the machines, that type of under.
I think that's quite a good analogy for what could be happening, but I think Bob's probably a better person to answer, actually, because
I think
he's actually got his finger on the pulse on the day-to-day market.
Yeah, I mean, if Labour get in, if you look at their old manifesto, they were advocating 3-year tenancies as a minimum. You know, they don't want 6 months, and they don't want 6 months or 1 year tenancies. They want 3 years,
which is a lease, basically, isn't it? It's no longer a tenancy.
It's basically a lease. Yeah,
lease.
Yeah.
Okay.
For buy-to-let purposes, lenders will take 2 and 3 year ASTs. Otherwise, anything longer, they consider that to be a lease. So it could be that the market will evolve. You know, people, tenants want stability. They don't want to be turfed out after 12 months, with their kids and furniture. So I think it'd be a good thing, actually. So it gives the landlord.
Won't it kill your market, Bob? I mean, if people are going to go in for leasing and they're going to get leasing on good terms, and obviously the rental market on the leasing side will probably come down because demand will go up. Won't that kill the mortgage broking market?
No, the market will adapt. The market will adapt. And from a landlord's viewpoint, what better to give a tenant a lease and put a fully repairing, insuring clause in there, so the tenant pays for all the repairs and the insurance.
Excellent, yeah.
Total hassle-free letting.
Then if it becomes a lease, Bob, then are you going to what's it now, the TDS schemes and all that stuff, all the heavy regulation, won't that all go out the window then?
No, I think, as I say, lenders will adapt. Leases already exist, by the way. If you give your house to the council, they'll take it on a 5-year lease. So it's not a new concept. It just means at the moment, only local authorities are using it. But, give that weapon to the landlords. I think it'll be quite popular, to be honest with you. I'd love my tenants to pay for their own insurance and repairs and, not call me out when the bulb is fused. I'd love a lease like that. But at the moment, the way the Housing Act tenancy agreements are structured, the landlord is still liable for the repairs and minor issues and maintaining everything.
There's a big issue, isn't there, where local council goes in and puts orders. What are they called? They've got a particular name of what they're called. They're like restrictive orders on the landlords, forcing them to undertake thousands of pounds of repairs. And I don't dispute the councils may be right, because some of these rogue landlords, like you were saying, are type of people who put people in their properties but never spend a penny on them. We've got Cam Patel who says that some people are buying these properties and to find out they're on lease, and obviously they can't sell them. But I don't think possibly it works that blindsidedly. The solicitors should really be advising purchasers that the property, especially if it's a flat, will be a lease, and there's certain restrictive clauses on leases. Each lease has been structured in a certain way, but that lease is slightly different to the lease when we're talking about tenant leases. But definitely there's a foundation there. Bob, you're right. If the councils already have 5-year leases, so those documents or those legal precedences are already there. All it takes. Lakhi, what do you say? Do you think it's a good thing?
I think from a tenant point of view, I think it's a good thing, because, like Bob said, if somebody can, they've got a family, they've got furniture, then it probably makes it easier for them to know that they've got a longer term view in terms of staying where they need to stay, either because of schools or the location actually allows them to be too close to work. So, and also the whole hassle of actually trying to get up and go. 6 months, 12 months, really, if you think about it, doesn't never really ever make any sense from a tenancy point of view, because it just seems like far too short if you really think about it a bit harder. So I think a 3-year, 5-year lease does actually make a lot more sense from a tenant's point of view. From a landlord's point of view, as the whole buy-to-let industry is being filtered out now, so you're getting a lot of professional business people moving into it. Most of them would have an understanding of how retail or office leases work anyway. So the whole idea of actually doing things in that manner is a norm anyway within commercial businesses around offices, retail, industrial blocks that get leased out to companies. Mm-hmm. So I think in some ways that it may just be a continuity of commercial moving into private in a slightly different way. So it might actually simplify things rather than complicate them.
Sonia says she likes the idea. It obviously has a resonance with the landlords who would like to have tenants in there for longer term. And I think most people, landlords, would like the sound of FIR. And obviously FIR is not a swear word. It's all about making the tenant liable for all the costs of repair. Is that right, Bob? Is that what a lot of landlords would like to hear? FIR to you too. Yeah?
It's FRI.
Okay, then it's even better. FRI to you too.
Yeah. Short for
Right.
Friday. Yeah. Yeah.
So why don't we just give what abbreviation of FR is? Is that
fully
insured and repair? Oh, it's fully repair insure, is it?
Yeah, fully repairing and insuring. FRI.
Okay. Yeah, FRI to you too, sir. You think landlords would like to hear the sound? Sonia likes it anyway. She's picked up on it. And obviously Sonia also asking whether these long-term leases are available. And I think they are available. It's all to do with your tenant, isn't it? Whether they will understand them and whether they'll be comfortable with signing a long-term lease, because that is a commitment, rather than like having a mortgage, isn't it, Bob?
Mm. Yeah, and the biggest thing is the lender. Will they be happy with it? Because they don't like anything longer than 3 years. So what you don't want to do is do a lease that contradicts your mortgage terms, because that could cause an issue down the line. So always speak to your mortgage broker, always speak to your bank, and see whether they will allow that sort of lease.
Okay, we've got Property Link who say they like the debate. I think they've taken a fancy to what we're talking about. Obviously, these are important hot topics. I think a lot of the stuff that we talk about is about solutions and things that are there under the noses of lots of landlords, and sometimes landlords don't like to talk about it, but it's good that we talk about it because it gives them an excuse to listen in and try and find out some tangible solutions. Meena Patel says, good morning to everyone as well. This morning, we're in the last minute. Lakhi Singh, the property fixer. Lakhi Singh, give us your input. What's your last word on keeping your eye on the prize and trusting the process? Can you really trust the process where lots of different people are involved, or do you need to keep your finger on the pulse like Bob and make sure that you explain to people in that process what is happening so they don't misunderstand applications?
Very quickly, it's possible to know what's around the corner with anything that's going on, and everything's happening day by day. Lenders are coming in, lenders are going out. There's more lenders going out than coming in. So it's a real hodgepodge. So there's a lot of uncertainty. So my most important message to any of the community now, the alternative business solutions community, is that you know, talk to professionals, talk to Bob Singh, talk to ourselves, find out what the risks are. Don't assume anything. Presumption is the mother of all flip ups, or there's probably different ways of saying it. But so presumption is the biggest issue when it comes to assets, so be very careful out there.
Thank you very much, Lakhi Singh. We're about to close off. Bob, thank you so much for invaluable input. We will look out to seeing you again, and thank you for everyone for listening. Danny also says it's a minefield. I think the legal bit, the leases and everything, obviously something to be worried about for lots of people. Thank you so much. See you tomorrow, 8 a.m. 9 a.m. Lakhi Singh drive time. The Lakhi Singh, the property fixer, alternative business and property solutions community. Tomorrow we have someone on. I think it is Mr. Mohsin Rabjani, a gentleman who's seen difficult times and has got a lot of wonderful solutions about rehousing and trying to get people back into the working world. We'll speak to him tomorrow. Take care.